welcome back to our channel. I'm Nicole Shlass.
And I'm Stephanie Nause, and we are the Homeplicity Realty Group at Keller Williams in Toronto. And today we're going to dive into a hot topic, the much anticipated interest rate cut earlier this month and the impact or lack thereof on the Toronto real estate market.
So Steph, after all the hype, it seems like the interest rate cut hasn't really moved the needle like many experts expected.
Sure hasn't. The Bank of Canada dropped the key overnight rate by 0.25 percentage point, and we were all bracing for this surge in market activity. Here we are 3 weeks later, and things surprisingly are still quiet.
I mean, it's interesting. You were thinking we'd see a flood of buyers rushing back into the market, similar to what happened last spring after the rate pause, but buyers seem to be holding out, waiting for a more significant drop.
Yeah, exactly. And sellers are actually also playing the waiting game. They're hoping for more buyers to jump in before they kind of start making their market moves. And this has created, well, it's continued the standoff.
It has. And let's talk about affordability. Even with the rate cut, affordability is still a major issue. First-time home buyers are finding it tough to enter the market, and sellers are pricing their homes above market value, expecting that rush that still hasn't come.
Yeah, true. Sales were down 22% year over year, so that's number of sales may seem to be continuing that trend, a little bit less significant with cuts, and there's still some help. Economists are forecasting 1 or 2 more rate cuts by the end of the year, so yeah.
And if we do see another rate cut, even just another 0.25% points, it might give buyers and sellers a little bit more confidence, but for now the market is just holding out.
Yeah, holding pattern. And we are seeing some areas like Leaside, Lawrence Park seeing a bit more activity overall. The market is still pretty sluggish. Detached homes are doing a bit better than condos, as always, which are continuing to struggle.
Speaking of condos, pre-construction market is facing its challenges.
Sure is.
Higher interest rates mean some buyers are finding it difficult to close those deals, and that's leading to lower prices in the assignment market.
Yeah, those deals they did years ago. It's really a tricky situation, and if too many units are offloaded at lower prices, it definitely can affect the value of the entire building, which really isn't good for developers or existing owners in that building.
Let's not forget about investors with elevated interest rates. There's still many on the sideline, even with higher rental demand. Numbers just don't really add up to that positive cash flow in many cases.
Yeah, I mean, there's always a silver lining for investors who are willing to take the risk and who can afford these opportunities, especially in a rental market where we are seeing multiple offers typically.
So what does this mean for buyers and sellers and homeowners? Buyers, it might be worth waiting a little bit longer for potentially more rate cuts. Sellers, stay patient and realistic about pricing. And for homeowners, it's time to stay informed and prepared for any changes in the market.
Yeah, absolutely. And the key takeaway here is going to be stay tuned and be ready to act when the market does start to move. And as always, if you have any questions or you need some personal advice, feel free to reach out to us at the Homeplicity Realty Group.
I think that's it. Thanks for tuning in. Don't forget to like, subscribe, hit that bell icon for more updates on the real estate market, and we will see you next time.
Yeah, see you next week. Bye.